Well, thank you everybody for being here this morning. Congrats to the Bitso business team for putting on a really excellent event. I think the turnout here and the quality of participants, even just day one in the morning, I think this has vastly exceeded expectations. So just want to extend a congratulations to the Bitso team. I know you've put a lot of work into this, and thank you for hosting, and thank you for the invitation to be here. So this panel is going to be exploring a theme that Daniel actually was mentioning in his opening remarks, which is how stablecoins, we've seen in the last 12 to 18 months, stablecoins have transitioned from being primarily a tool in crypto trading and in remittances to really becoming a tool for enabling global commerce. So we're going to be diving into that a little bit today. We've got a really great panel of folks here who are going to bring some different perspectives. We have Monica Ramirez of Anchorage Digital. Anchorage is obviously custodian and also one of the largest stablecoin emitters. Actually, the only regulated issuer at this point. We'll let you discuss that. And then we have Nick Philpott, who's the co-founder of Zodia Markets, and we have Peter Wexler of Visa. So we have a really great perspective here on from both the commercial side as well as the issuance side of how stablecoins are being used today globally. And I want to start off actually just by doing a quick round of intros. So maybe Monica, take like 30 seconds, give us kind of the elevator pitch, yourself, your company, and maybe talk a bit about how Anchorage fits into the stablecoin ecosystem at this point in time.
Great, thank you. Hi everyone, good morning. My name is Monica Ramirez Arrellano. I'm with Anchorage Digital, which is home to the only and first federal chartered crypto bank. Within Anchorage, we focus on our core products, which include custody, trading, staking, settlement, and also protocols, especially for token generation events. And now within the company, we have a specialization within stablecoins. And how we manifest stablecoins is through three main verticals. One, infrastructure for issuers. Two, stablecoin issuance as a service, so really leveraging our crypto charter, thank you, the OCC crypto charter to be able to issue regular Genius compliant stablecoins, and money movement, which includes anything from correspondent banking to supporting the movement of money throughout the ecosystem.
Nick, we'll kick it over to you.
Thank you. So Nick Philpott, I'm one of the co-founders of Zodia Markets, which is majority owned by a British bank, hence the accent, called Standard Chartered Bank, which is specializes in Asia, Africa, and the Middle East. We specialize in stablecoin on and off ramping on the wholesale side. So it's all well and good if you're trying to do small remittance or pay for an Uber or something like that, but we're dealing with oil companies, iron ore traders, shipping companies, things like that, and they're using stablecoins to buy and sell different cargoes. Also do collateralized lending, and we're in the process of adding third-party payments.
Yeah. Hey, this is Pete Wexler, part of the global crypto product team at Visa. I think most people probably know Visa. I know there was a graph put up earlier. I think we were 15.7 or so trillion of the PV in 2024. That was discussed. We have 4.6 billion credentials out there in the world. We obviously work on making it very easy for people to pay anywhere and everywhere across the globe. And little known fact, we do have a crypto team. Obviously, I'm part of that, and happy to discuss what we do today on the crypto side and how we move stablecoins 7 days a week at Visa.
Great. So to kick off here, I'm going to talk about we're going to talk about one of the kind of the historical blockers to adoption of this particular asset class has been on the regulatory front, and we do have a couple panels on regulation later today, so we're not going to go super deep into this. But Monica, I do want to talk to you a bit about. We've had some regulatory advancements in the U.S. the last couple of months that have really opened the door for stablecoins as a mainstream tool for payments in the U.S. and beyond. And I'm particularly interested in what is the significance of this event in terms of your customers? How are they? What has been their reaction? How have the conversations changed with customers and potential customers of yours with this new regulation in place? What does this mean practically? And then Peter, I'd like you to chip in on that question as well.
Great, yeah, great question. So really what the Genius Bill has allowed us to do is to bring a lot of partners to the conversation, allowing to have regulatory clarity, which has been a topic that we've always been wanting for the last couple of years, and we finally have it. The conversations really range from like two sides of the spectrum. One is to get yield attributed to the stablecoins, since a lot of money movement requires supporting stablecoins and having the ability to move money faster, cheaper, better, then having the additional yield is an interesting aspect to that value proposition. And then on the other side is also distribution. So big players that have the ability to manage and have the ability to distribute throughout their partners, they get a benefit from having the ability to then have that recurring cash flow that comes along with the yield. So it's a lot of infrastructure conversations, and the Genius Bill provides the opportunity to understand what are the assets that back it behind, what are the frameworks, what are the types of partners that you should be engaging with and having those questions, and allows for the general education to then be able to start to hit go and be able to issue stablecoins and participate in the market.
P2P.me is the fastest way to buy and sell USDC in Brazil using PIX. It's direct, secure, and fully on-chain. Backed by Multicoin Capital and Coinbase Ventures, P2P.me offers a compliant on- and off-ramp with ZK KYC and no hidden fees. You can easily use P2P.me to pay PIX QR codes in Brazil using your USDC balance. Just top up, scan, and pay. Check out the link in the show notes to get started. I'd like to take a moment to tell you about our show sponsor, Avenia. If you're building a wallet, a crypto consumer app, or a global payment platform, Avenia is your bridge to Latin America. You can instantly connect to PIX, SPEI, and CBU using stablecoins with a single API. No banks, no FX desks, no SWIFT. Head over to avenia.io to learn about how you can move money globally with full compliance and real-time settlement. Now back to the show.
Yeah, I think in the U.S., I think the Genius Act is just super exciting. It's just really allowing U.S. banks to really kind of enter the space, to be honest, because they've really been precluded from doing that historically as well with things like SAB 121 and all that stuff that's been repealed. Now they can really kind of look at blockchains, look at stablecoins, and start to take into account how these are going to really effectively change their business and hopefully evolve their business and make their business more efficient, make money movement more readily available 24/7 or somewhere close to that over time. So I think it's just a really exciting time in the U.S. With the Genius Act passing. Obviously, you have MiCA in Europe, and you have these other things, MAS in Singapore, that have already kind of broken ground. And I think collectively, with all those regulations and that which are kind of I think over time someone will merge on each other. That just really opens up global commerce in a very big way. So I'm really excited that this has happened in the U.S. I think it's really good for the U.S. dollar. And, when we talk about stablecoins, typically we're talking about U.S. dollar denominated stablecoins. Of course, there are many others, and we should talk about that too, and I'm sure we will. But yeah, it's really a game changer for U.S. banks, quite honestly.
And then, Nick, I just want to turn to you here for a second. So you've talked a lot about how, while stablecoin payments may be this kind of flashy new thing that maybe people are hearing about for the first time in the last year or something, this is actually part of a transformation that's been kind of happening for quite some time. We've been seeing for several years now kind of a retreat in the correspondent banking system, and there's kind of a vacuum in the cross-border payment space. And I know you've been sort of knee-deep in this stuff for a couple decades now, so I'd love for you to maybe give us a bit more context on just how should we be processing this as part of some other broader global commerce trends?
Yeah, it's two things. So broad, big picture, it is the migration of money onto the open internet, because money is not internet-based. Dollars move around primarily on Fedwire, ACH, and other various centralized systems. Almost all the other currencies, British pounds, exactly the same thing. The second thing, exactly as you just referred to, is the retreat of the correspondent banking system. So a lot of people have called this, banks call this de-risking. So they would look at a particular country that winds up on the FATF, which is an anti-money laundering organization, winds up on the FATF grey list or one of the sort of higher risk lists. And so the big dollar correspondents like Citi, HSBC, JP Morgan, Standard Chartered, our parent, decide to withdraw services. What that means is that many countries, it's now getting harder and harder to access dollar banking from your local banks. And if you do get dollar banking, then the ability to actually move dollars across border is getting harder and harder. This has got so bad that the G20 has tasked the global regulators in 2020 to start fixing this. Unfortunately, they're not making a lot of progress because the banks still don't want to take the risk on many of these countries. What we're starting to lean into through Zodia Markets and stablecoins is providing that alternative to the correspondent banking system. And I would argue it's an enhancement. It's rather than waiting for the correspondent banking system to send money. So, for example, if I'm in Singapore and I'm trying to send dollars to Malaysia, I have to go to a bank in Singapore, then the dollars clear through the United States, then you come all the way around the world and you get to Malaysia. It's faster to do that payment by putting cash in your car and driving it to Malaysia, which is an indictment of a financial system if ever there was one. So being able to move everything via stablecoins, I think, is going to help address what is now becoming a major issue in the world.
And then, Peter, turning back to you here, I know Visa, I think maybe some people, when they hear the name Visa, and they think, this is sort of like the TradFi, it's maybe not the first name you'd expect to see kind of in the crypto blockchain world, right? But like you guys have actually become a major player in the stablecoin game. Like you're settling transactions 7 days a week. I know there's a really big business on the card issuance front. There's a lot of these kind of, B2C kind of global wallet, stablecoin cards products that are coming out right now that are becoming really popular. Would you love for you to just maybe tell us a bit more about like Visa's play in this whole stablecoin game right now?
I appreciate the question. And we've had a crypto team for some time now. It actually predates myself personally. And there's always been a focus at Visa on this kind of like network of networks, and really just blockchains are just simply another network. Stablecoins are another form of currency. And when we look at what Visa does, which is obviously connect an issuing bank and an acquiring bank to facilitate payments. We've done this historically with, 150, 160 currencies and 27 global settlement currencies. And when we looked at things like USDC and other stablecoins, we said quite simply, like, well, why can we not simply accept that as a settlement currency on our network? So that's what we've done for the past 3 years at this point, is support that. We actually support USDC, EuroC, USDG, and PYUSD, all as settlement currencies on our network across 4 different blockchains. And we have the ability to, take a settlement that historically was in dollars and have that settle over a chain in stables, and similarly settle that out to acquiring banks as well in stables. And the fun fact there, when you talk about Genius Act, is that we've been doing this globally. We have not been doing this in the U.S. Because there wasn't that regulatory clarity, which has now come out. So we've been doing this across, I think, 14 countries to date. Obviously, the U.S. is really kind of next in that list. And I think the other thing that you noted in your question is the kind of what you've seen in the market over the last couple of years, which is this kind of launch of stablecoin linked cards, which I think are fantastic for global citizens, having the ability to take a non-custodial wallet that has stablecoins and being able to spend it across Visa's merchant network, which is, I think, around 150 million merchants. I think from a Visa perspective, we have an ability to really off-ramp. We consider Visa a good off-ramp and an ability for people to spend down their digital assets, spend down their stablecoins specifically. And you're seeing just an influx of citizens across some of those countries that were mentioned by the CEO of Remitly, like in Turkey, Argentina, et cetera, where the currency's been really massively devalued over time. They're going to stablecoins. They're going to specifically U.S. dollar denominated stablecoins to really preserve their wealth and to have more spending power. And it's been quite successful, and it's great to see. And I think, kind of for the U.S., I think the best thing that ever happened was Tether and USDC, quite honestly. But from a Visa perspective, we look at stablecoins as a form of money, and we're more than happy to support it on our network in a variety of different ways.
Nick, turning back to you here, tell us more about how Zodia is using stablecoins as like operational rails in FX and cross-border transactions, particularly as it relates to I know you have a lot of commodities business clients, so I'd love to maybe walk through like just operationally how does that work, and like what are the pain points that you guys are able to solve using these new rails?
The biggest problem for anyone running a digital asset business is cash. It's not as fast as the stablecoins. It's not as reliable. It's certainly not as cheap, and it's certainly not as available. So trying to work out how you can speed up cash is the challenge that I think almost everyone in this room in some way, shape or form faces. The problem with the commodity guys is you're just dealing with a completely different scale. So someone turns up with a VLCC tanker of crude oil, current oil prices, that's $130 million single ticket, give or take. Our biggest single ticket year to date was $155 million. You've got to be able to do that in a single transaction. So having access to very, very good banking is the first part. Second part is then working out how to get a whole range of different currencies, and we do 21 so far, to do T0 settlement. And I don't mean T0 end of the day, I mean T0 as fast as possible in those sizes. So we've done that with a whole range of currencies: Turkish lira, Peter mentioned, Emirati dirhams, Bahraini dinars, offshore Chinese renminbi, figuring out how to get the plumbing to go faster. For the commodity traders, what they're doing is they're just buying the stable coins from us, and they're using those to buy and sell cargoes. Every single country is either a commodity importer or exporter, or both. So everybody needs access to dollars in some way, shape or form, because all those markets are dollar based. And because of that retreat of correspondent banking, moving dollars between some of those countries is now, I was going to say hard, it's impossible in some of them. So stablecoins are now serving as an alternative, and what we're doing is we're helping them buy the stablecoins, they then use them, and then we offer them back into cash, their accounting currencies, whatever that might be.
Amazing. And then Monica, I'm going to turn back to you here. And I know Anchorage has like a white label stablecoin platform where you can essentially manage everything from the issuance to the burning to some of the scalability, some of the security features. Love for you to talk a bit about that and just practically how it works. And then I think it also opens up an interesting question of, we've seen lots of new stablecoins being issued this year. We'll probably see lots of new stablecoins being issued. And in your conversations with clients, like how these conversations evolve, and whenever it revolves around like how do I know if it's a good idea to issue a stablecoin for myself in this particular circumstance? Like what are maybe the pros and cons? What should we be considering? Would love your thoughts on that. And if Peter and Nick, you want to jump in on that as well, like should I issue my own stablecoin? Like just because I can doesn't mean I should, right?
Yeah, stablecoins are really like the tip of the iceberg. It's a really cool use case where we start to see movement of money, but really there's a lot of infrastructure that is required to issue and collaborate and work with a stablecoin. So really you start with custody, ideally from a qualified custodian, where you have to start to hold and have the comfort of how do you own these stablecoins, how do you hold these stablecoins, and if this is going to become your primary source of money movement, then you have to be very comfortable where you store them and who has access to them. So started with custody, then also considering the issuance, who's your issuer, how do the smart contracts work, and what are also the assets that back this stablecoin. Having a lot of liquidity, the ability to know and track really one-to-one the stablecoin and have additional float, and then distribution. So working really closely with a partner, because for stablecoins to have enough scalability, liquidity, and acceptability, these are required to have a significant amount of market cap in order to be able to be a true source of money movement. So really when a stablecoin, you're really confounding ownership and value at the same time. The infrastructure that backs the stablecoin is extremely important. So that's something that we take very seriously, especially being regulated currently by the OCC, and having the Genius Bill, having the OCC as be one of the primary regulators at the federal level, having a cognizant understanding of what the issuer responsibilities and framework. I think that that's going to be very key for stablecoins. And the conversations have ranged from, I want to issue a stablecoin because I already support a lot of stablecoins, so is there a way to increase my brand or have more direct connection with my customers? And then on the other spectrum is, I have enough distribution already, can I instead invest in a stablecoin? And usually it's a very significant upfront cost to have a stablecoin for all the reasons I kind of mentioned about like the infrastructure is key. But then after a while, some partners might think, instead of spending a year integrating a new stablecoin and then maybe that loses favor, why don't I have my own stablecoin that then I can control a little bit more the distribution and the trajectory of how that becomes a little bit more global and benefits my customers. So they ran the range of the gamut in terms of like the conversations. And Anchorage is now also partnering with Avenia to onshore USDTB. So that will be a great partnership where we start to see an OCC chartered bank really partnering to onshore a Genius compliant stablecoin in the US.
I think there's a huge opportunity for the banks, but not to be stablecoin issuers, because banks are not that great at technology. 20 years in a bank, I'm pretty familiar. And the moment a bank goes to their regulator and says, hey, we're going to issue a stablecoin, you'll scare the living daylights out of the regulator and you add 12 months to the delivery. The better thing to do is to be a banker to the stablecoin issuer, because you can custody the treasuries that are held in reserve, you can broker the treasuries to the issuer, you can do repo and reverse repo on the treasuries, you can collect net interest margin on the cash buffer, you get payments fee income on every mint and burn. So there's 5 different revenues straight off the bat without having to worry about technology or licensing. You let the issuer go ahead and do that for you. The opportunity there is fantastic. And from our perspective, you need to have good quality banks acting as the mint and burn partners. To give you an illustration, there's an Australian dollar stablecoin that we worked with. It took us 2 days to get Aussie dollars from our account to their account to mint it, because their banking rails are terrible. So addressing that blocker in the system, I think, is critical. And it baffles me that the banks aren't grabbing the opportunity with both hands.
Interesting. So you think they're kind of, is this a question of maybe they're seeing the news, they're seeing some of the FOMO and the hype around, they're like, oh, like everyone else is launching on a stable coin, like we need to kind of figure out what our play is here. But you're arguing that maybe that's not the correct approach. Maybe your approach should just be providing services to these guys who are
exactly. The stablecoin issuers are already doing their thing, and we're already seeing that. We're seeing other banks come to us because StanChart has some pedigree in this area, and it's clear that their boards, whose understanding of digital assets and stablecoins extends as deep as the front page of the Financial Times and no further, and they've just said, do something. Tether is making a fortune, Circle is making a fortune, do something. And now they're running in a panic.
Yeah, I think those are, I think they both summed it up really well. And I think the answer that you're hearing is, it depends. Right. Like, it really depends, and you really need to do a lot of diligence on your approach and what value you're bringing to your existing, bank members and constituents to see if this is something that's right for you. In regards to the tech stack, we have a product we call Visa Tokenized Asset Platform. So we actually do provide, the smart contract mint burn facility for banks that are looking to do this. So most notably, we announced we're doing this with BBVA in Spain, who's rolling out their own euro stablecoin. But again, the answer is very much it depends, and you got to do a lot of work here, up front.
And then, Peter, you'd mentioned earlier about kind of the contrast between like USD stablecoins and non-USD stablecoins. And I think one of the interesting themes we've seen emerge over the course of this year is really how some of these non-USD emerging market stablecoins have begun kind of finding some product market fit. And obviously, I know Bitso has they're in this game as well. They've got a Mexican peso stablecoin. There's a lot of these in Brazil. And I just want to kind of open up to the panel here on, from your respective vantage points, what types of interest or demand are you seeing on for non-USD stablecoins, and perhaps like what are folks using these for? Maybe not necessarily a store of value in the same sense you'd use a USDC or something, but what's sort of driving the interest in these coins at the moment? Maybe whoever wants to take that one first.
Yeah, I'm happy to start. Like snake pattern, we'll go back. Yeah, I think there's a lot of interest for other stablecoins out there. I mean, I had mentioned earlier that we support EuroC, so we do support settlement over a euro-denominated stablecoin, and I think I mentioned before, like we have 27 global settlement currencies that we have at Visa for cross-border settlements that happen today with our partners, and I think from our vantage point, I think there's value in having each one of those ultimately have a corresponding stablecoin available to help facilitate more efficient 7-day-a-week money movement, because not in every market are we able to move funds 7 days a week. What we've done, let me take a step back. Historically, at Visa, I think where people know us and understand us from a consumer perspective is, they swipe their card, they tap their card, they insert their card. You get your cup of coffee, you get your groceries, you get it immediately. But the merchant doesn't get paid. That's not how it works. It uses SWIFT. It uses Fedwire. It's really batch jobs that happen when banks are open. What we've done with the infrastructure we've built is, we've now enabled it that we can operate that same concept of settlement, but operate it, 7 days a week. And maybe in the future we can operate it multiple times a day or atomically on every transaction at a certain point. But stables and blockchains that are readily available 24/7, 365 allow for that. So I think there is, from a institutional perspective, a desire to have a variety of stables available in currencies that are kind of used in a global sense. But I'll kick over to you.
Yeah, so in our business, as you sort of suggested, the majority of what we do is US dollar denominated. I think only one person has ever successfully guessed our number 2 currency. So we've done 30 or 40 billion year to date US dollars. This next one we've done nearly 3 billion year to date, which is the Turkish lira stablecoin issued by Bilira. Now that sounds completely insane, because why would you have something stable, a stable coin linked to something like the Turkish lira, which is unstable? The reason is getting access to Turkish banking is not the easiest. Turkish lira is not the most, it doesn't settle quite as quickly and as reliably as the euro, for example. And if you're offshore, this is the particular appeal, it's very hard to get an offshore Turkish bank account. If I'm in Singapore or Mexico City, I can get a euro bank account. I could probably get a sterling bank account. Good luck getting a Turkish lira bank account. So we've got a lot of clients who are using TRYB at scale. And these guys are steel exporters, that sort of thing, VASPs as well. We do support lots of other currencies, so Swiss, sterling, euros, Aussie, Sing dollars, but so far Turkish lira is absolutely smashing it.
Yeah, having other non-USD stablecoins, I think it's important, especially as currency is very tied to sovereign nations and money movement, and also how countries issue debt. So I think that we will see additional stablecoins. What I think it's a cool thing now is with the Genius Bill having the ability to have a framework that can be either through reciprocity or mimic across different countries, and have a system where you can then have an efficient FX among these USD and non-USD stablecoins. I think that will be very interesting. So having kind of the rules of the road will be hopefully a good catalyst to be able to have more than other USD stablecoins.
Just to slip in one quick point. So our parent is setting up a Hong Kong dollar stablecoin along with 2 other potential issuers. I think there's going to be huge potential for Mexican peso stablecoins, MXNB, Bitso's planned stablecoin, to try to help bring efficiencies to that huge China to Latin America and China to Mexico trade corridor.
And then, Nick, we were chatting backstage about how can we kind of make like an Uberified experience out of this almost? Like how can you will real adoption come of these new forms of payments when like the user experience just becomes so easy for the business who you can, we were talking about this a bit backstage. I'd love for you to maybe give some of your thoughts on like how to just make this like a smooth process, like why that's so important.
Yeah, sure. So with the retreat of correspondent banking that I referred to at the beginning, it feels more and more these days that sending money across borders like placing a bet. Is it going to settle in an hour? Is it going to settle today? Is it going to settle tomorrow? Or is it going to wind up getting stopped by some outsourced compliance center who just think, oh, this looks suspicious, so I'm just going to stop it randomly for a couple of weeks while we investigate. Instead, if you can try to make that whole settlement process visible, then you can start to address the other cost, which I think is underappreciated. So everyone's trying to address, make it cheaper in terms of execution, explicit costs, how much does it cost, and implicit costs, what's the opportunity cost of my capital. But the third one, which is underappreciated, which to your point, Uber absolutely nailed, which is the psychological cost, which is that uncertainty, that unease about when is it going to settle, when is my money going to arrive, or is my money going to get lost? Because cross-border payments get lost all the time. So if you can map that out like the Uber map, which doesn't make your taxi any faster, doesn't make it any cheaper, but it tells you where it is, so you don't stand in your front window like a psychopath thinking, is the taxi going to come? Am I going to miss my plane? Yeah, you can see, oh, it's 5 minutes away. I can make a coffee, and then I can walk out straight into the taxi.
I love it. It's like a Domino's pizza tracker. I mean, that's
that was pizza,
or like tracking your Amazon package delivery or something.
Exactly.
Right? You can see exactly where exactly your money is in the process.
If we can do it with pizza, we can do it with money, guys.
Yeah.
So just wrapping up here, we're out of time here, but we'll just do a quick rapid fire round to close this out. Just two questions. What will be the total stablecoin market cap in 2030? And then what is one sort of maybe against the grain or heterodox prediction or opinion you might have on stablecoins that might be spicy or controversial to some? Maybe Monica, we'll start with you and go down the line.
Sure. So today the market cap is at $270 billion. The last 30 days it grew by 6%, so that would make it in 2030 by $1 trillion. But if you apply CAGR, that's $9 trillion. So somewhere between 1 and 9 trillion out of back of the envelope. And in terms of like new ideas, there's a lot of discussion on having stablecoins that are used in different protocols or chains and having that interoperability. I think we should start to talk about stablecoins that are issued by one issuer or that has the ability to then have interliquidity and be able to move one-to-one or in better shape all the different stablecoins. And I think that that's going to really unlock a lot more movement.
So 2 trillion, that's Standard Chartered research number that's been used by the Fed, various things. So that's the official stance from our house. Spicy take, there are 180 currencies in the world. We are very much now in a secular trend where that number is going to go down. We are going to start to see currencies dying because there is nothing that some of these countries can do to stop themselves from being flooded with particularly US dollar stablecoins. The opportunity, I think, for countries like Mexico is by having a Mexican peso stablecoin, you can turn your currency into a regional and by extension a global currency. And so you can beat that wave.
Mm-hmm.
I love that because it kind of goes into my thought, which is there's a lot of geopolitical, turmoil that may come about because of the preponderance of U.S. dollar denominated stablecoins, the proliferation of consumers, everyday consumers, citizens, getting a hold of a U.S. dollar account. And what does that do? What do central banks do? What do regulatory regimes do in response to that? One, fold, two, attack, yep. Right? So there could be some retreat, there as well. So it's kind of counter to what you're proposing, and perhaps both happen. I think both. And then in respect of the market cap, I mean, I think like Standard Chartered had noted 2 trillion. I think Citi did as well, and I think JPM noted like 500 million, and I think they're wrong.
JP who?
JP. Never heard of it. Okay. Yeah. It's a small company based in the U.S. I think it's going to be more than 2. I think it's probably the 3 to 5 trillion range.
Awesome. Well, Monica, Nick, Pete, really appreciate your time here. Thanks everyone for your participating here, for attending, and hope you enjoy the rest of the conference. Thank you.
Thank you.